Okay, welcome everyone. My name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. We're a unique custom software creator and educator. I developed the software many years ago. I've been educating students from around the world, and it's a very successful system. It speaks for itself. Just a brief bio. I'm a professional trader for 20 plus years. I'm considered a technical analysis expert. I'm the creator of a one-of-a-kind custom trading software we like to call, or is called the Market Price Anticipator software. More about that in a moment. I'm the founder of GPA Trading Services 7 years ago in 2010. I've been educating students from around the world for over the past 10 years. I've conducted numerous live events, speaking engagements. We offer a platinum program, one-on-one coaching, mentorships. So we've been doing this an awfully long time with a huge amount of success. If you haven't had an opportunity, this is our website, GPA Trading Services. You're welcome to peruse that at your earliest convenience. Today's topic is called How to Supercharge Your Trading Results by Anticipating Future Market Conditions. Brief disclaimer, I won't read through this, as many of you have seen this many times, but I will highlight a couple of things. Trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. A person should use only funds that they can afford to lose, and that fits within their overall financial plan as developed by a qualified financial planner. Our rules include never risking more than 2% of your entire account balance on any one given trade. Options traders, we recommend you risk no more than 5% of your entire account balance on any one given options trade, and always adhere to strict proper money management. Period. End of story. Always adhere to proper money management. All information provided in this presentation is for your educational purposes only and should not be taken as investment advice, nor as a specific recommendation or endorsement to buy or sell any specific investment. Trade at your own risk. Now, the key components when anticipating future market conditions which supercharge your trading results is basic. It's support and resistance. Many traders think they know what support and resistance is, but is it truly significant support and resistance when price starts to move in the opposite direction? Is that considered, if it bounces, is that support, or it starts to go down, is that resistance? Well, this software will take into consideration true support and resistance and utilize that along the way. It also takes into trend direction. It's important to trade with the trend. Well, I don't know if all of you are what type of traders you are, if you're scalpers, day traders, investment traders. So yes, it is best to trade with the trend, but it doesn't mean if I'm trading against the trend, I can't be successful. You just need to understand what direction the trend is in and how you should either scalp against that trend or perhaps wait for the dip in an uptrend to buy it or sell that rally in the downtrend. But you can trade counter direction if you have the right tools. The right tools will always be, I repeat, the right tools for successful trading will always be utilizing multiple time frames. And not only utilizing multiple time frames, but understanding how lower time frames cycle within the larger time frames. And we like to refer that as a line of progression. And we'll show you in detail what we mean by that. Now, aligning the time frames is critical, no matter what you're trading. If you're trading stocks, futures, commodities, ETFs, bonds, all markets, if you align time frames, you have a higher probability outcome. And this is what we mean by aligning time frame. You'll notice from this first box, we have the indicators we will discuss and overbought territory starting to turn over. We call this the hook and cross pattern. It started to hook and cross on a weekly, started to hook and cross on a monthly, and it started to hook and cross on a daily. When you align the time frames, the outcome is a given. It's definitely going to go lower. No ifs, no buts, and no ands when the time frames align with these hook and cross patterns. Here's an example of oil, and this is where we started to see the same thing as I showed you a moment ago. Yes, our software includes these little triggers that fire to help you give a visual picture when to sell and when to buy, but it's all based on the cycling time frames and how the hook and cross pattern appears. What's unique about a hook and cross pattern, as we will discuss, is that once the hook and cross pattern appears, we automatically know the daily is going to move from overbought territory because it's overbought, and it's going to go all the way to oversold because the weekly dictated that behavior. And in here we can see the daily did exactly that. It was an overbought territory and went to oversold territory. But where does it come in when you have these longer term trends? As the weekly continues week after week after week after week, pushing lower, the daily is going to exhibit very specific behavior, and that's considered the line of progression. And it means that the daily should not only move to oversold, but as it starts to stair step, price will stair step, right? Time frames go against the higher time frames, with the higher time frames, against, with. So we develop what we call a slingshot phenomenon. This is guaranteed to happen. All markets have slingshots, whether they're up or down, depending on the direction of the higher time frame. In this case, we have the weekly going down, so the daily is expected in advance, long before it happens. You expect the daily to exhibit this behavior over and over and over. As I like to tell our students, as long as the weekly trend momentum and PAI are down, we're going to continue to sell daily slingshots over and over and over. And this example, it just kept repeating itself multiple times. Again, you can anticipate this in advance. Here's a currency pair. The pound dollar started where the monthly was deeply oversold, starting to turn with the hook. What does a hook mean, as I'll keep referring? When you get a hook on the monthly, it means the weekly is going to start to move from oversold towards overbought. When you get the hook and a cross pattern on a weekly, the weekly is going to force the daily to go from oversold to overbought. So notice how this sets up. We're aligning the time frame, and we're anticipating this big bounce on the pound dollar that you can see in these charts. Easily started with this stair-stepping affair, and as my daily started to move from oversold to overbought, why? Because the weekly gave us the hook and the cross. So as the daily was doing this behavior of moving from oversold to overbought, my 4 hours is going to exhibit what type of behavior? It's going to slingshot higher and higher and higher. That's what it does. And notice it slingshots, it slingshots, it slingshots. This repetitive behavior is easy to learn and guaranteed to have positive results. All you have to do is follow the line of progression. Here's another example on gold. Gold was turning over in a very deep long-term downtrend, and it was about to start a reversal trend shortly thereafter. But the monthly started to turn over in one of these slingshots. My weekly started to move, and it was starting to bottom here, but you'll notice we went lower first on the lower time frames. Then we knew the reversal was going to come. So as we walked through the process, we initially had the 4 hour slingshotting lower and lower. As my daily started to bottom and reverse, so we're expecting that, yes, this downtrend would soon end. You would get a trigger higher and then ultimately go long. Even though we started off with the monthly being oversold, this is important. The monthly being oversold is the reason why gold went on to soar much higher in the coming days and weeks. The daily reversed. What does a hook and cross pattern mean on the daily? The 4 hours is going to go from oversold all the way toward overbought. And this repeats itself over and over and over. Now, instead of looking at screenshots, how about we go straight to the charts and check it out live? Gold, speaking of gold, we got a hook and a cross pattern on the daily. Last time we got a hook and cross pattern on the daily, remember what we just said? It's guaranteed that once you get the hook and cross pattern, the 4 hour will move, because we're talking about a daily time frame, the 4 hour will move into overbought territory. Check out the 4 hour. The 4 hour moved from oversold towards overbought. And I'll scroll back to see this line. The 4 hour went from oversold towards overbought. And I told our students right then and there to go ahead and buy gold and look for it to at least retrace to a Fibonacci sweet spot location. Well, what does that mean? Well, we had a swing point high and we got a swing point low. We started with the daily hook and cross pattern. You will find that the software is so unique that it leads in advance. You can anticipate in advance future market conditions. And if you like Ichimoku or not, it's a great tool within the toolbox. But as you add to the hook and cross pattern with it, how do I know when, Ichimoku says if I'm above price and price is above and comes down to the cloud, it should bounce. Well, how do you know it's going to bounce and reverse there as it go through the cloud in reverse like it did over here? That's where the gauges come in, where the hook and cross pattern comes in. And what I said to the students was this is going to rally at least towards a 38, perhaps 50, maybe a 61.8% retracement. And it was because of the hook and cross pattern. And that hook and cross pattern developed early, and sure enough, price went right to where we expected. Well, then why did the daily then turn over and slingshot lower? Remember the rules. It's about the direction of the higher trend. That daily ended up turning and slingshotting lower because the weekly is still in a downtrend. So remember what I said at the beginning. You can have a high probability trade with the trend, but you can also have high probability trades with the counter trend moves as long as you understand what is unfolding. Well, the bias is we're not only going to continue to climb higher, we're starting to turn on the weekly, and the daily has given us a brand new hook and cross pattern. So watch over the next several days as this daily moves from this area in towards overbought, and this increases toward overbought. This is going to force that weekly to turn up, and we're going to see price make a move back towards 1306 and potentially above. Well, does that mean it's going to keep going and break the previous high at 1357? The answer would be a resounding yes if this weekly can turn like it did here, turn and go up, and the trend momentum that's down cross back to the upside. If we see this turn and go up and cross over, then not only are we going to go to 1306, we're going to go in and break the previous high of 1357. Notice what happened previously. I believe a lot in knowing what's happened in the past so you can more accurately anticipate what happens in the future. And the same thing happened here. When we turned and reversed, it crossed back up and we went on to make a new high here. Not by a lot, but it still made a new high. Then it did it again. It turned over, it reversed, and not only did it reverse on the trend momentum, on the price action indicator, it reversed the trend momentum back up right here. So if this is going to turn and go back up, not only are we going to go to 1306, we're going to go in and break 1357. All right, simply by watching the hook and cross pattern anticipates price in advance to know what the lower time frames are going to do. So what happens if we do get the weekly to turn and hook and cross back up? Well, A, we know price is going to go back towards 1357 with the high probability it's going to make a new high. But long before, we know this daily is going to be forced to go all the way up here in overbought territory. So that gives me days in advance to watch this thing stair step up towards the previous target of 1306. All right, so it doesn't matter what you're trading. Black gold, Texas tea, the Beverly Hillbillies. Black gold's going higher, and then it's going to have a major reversal to the downside. We're still going higher. For what reason? And we give part of this as Elliott wave instruction, turn by turn GPS coordinates of where price is headed. And we're going to go on and make another new high. And we're going to go on and make a move towards $62 and likely reverse between $62 and $63 and start a brand new downtrend. Well, why are we so confident price is going to continue to go higher? Because look at the direction of the higher trend. The monthly is still up with steep slope, crossing back over back to the upside. Both of these are headed up, so there's no question we're going to run into the cloud on this Ichimoku. And I suspect in the coming weeks and months, once this final rotation is over, or we like to call a cycle, it's going to reverse and go down, and a massive move lower for months and months and months. Well, when is this up move going to be over? when the weekly starts to turn and hook and forces the monthly to do it. But remember, what happens when you get a hook and a cross pattern? That means you're going to get that pullback. Some would say, well, how do I know when to buy the dip in the uptrend? In order for this to continue, this weekly moving from oversold to overbought, see this process where it cycles from one extreme to the other? During that cycle process, when I married these two indicators together, it is the most accurate trading system on the planet. And I beg to differ. Anyone that has a different opinion, once they learn how to use it, this will make any trader more successful. It will make any trading strategy more successful by lining the time frames. Remember that key of lining the time frame. Well, this system is so unique. It has an AI interface that interchanges and works with all time frames. So when I know I need to have the time frames aligned, I don't need to go to the weekly, the daily, the 4 hour, the 1 hour and study all time frames. I simply use the hook and cross pattern, and I use the slingshot phenomenon. It automatically has those time frames aligned when these patterns form and when they become a reality, where they hook and cross. The lower time frames, in this case, the daily, the 4 hour, etc., are up. And we talked about this going higher. But notice the same behavior. When a weekly moves from oversold to overbought, what does the daily do? The daily goes from oversold to overbought and starts to slingshot higher and higher and higher and higher and higher as this trend has been continuing. This trend will come to an end, and we're going to end with a lower high and a lower low long term, but we still need the monthly to finish that cycle. What happened the last time the monthly gave us a big cycle down? Oil prices dropped. The last time we had another one, it dropped. And even while it was going sideways, we still were able to utilize the direction of the trend momentum and the PAI. So watch in the coming weeks to perhaps month or so, as this finally finishes this up move and runs into the cloud, it's going to reverse, and it could be sooner than later, but we need to see that hook and cross pattern. So how do I know when a daily starts to give me a hook and cross pattern? Do I buy it, sell it, scalp it? Well, the key is when you get a hook and cross pattern, you can scalp it to the downside. I expected this would give us a nice pullback. What else does a hook and cross pattern mean? It means when you use another tool called the Fibonacci, and you run from the swing point low, the last time we were oversold, to the swing point high, we developed the hook and cross pattern. The highest probabilities, it will go at least to a sweet spot location. Well, the good news is as soon as I start to get my hook pattern, I know I have targets. And we teach you how to put your price value to your Fibonacci level. 38.2 in this case was $49.80. So we knew we're expecting this pullback. We expected to buy the dip in the uptrend and look for this to go on to make higher highs via the slingshot phenomenon. Why? Because as my daily was turning over, my weekly was up. Everybody good? Simple as that. And that's why you trade with high probability results. Simply aligning the time frames and by using the hook and cross pattern and using our slingshot phenomenon. Everyone loves the S&P. How do you know where the S&P is going? S&P is going to 2614, and eventually it's going to stair step. And if a couple of things happen along the way, as we anticipate they will, we're going to go to 3,000 and above and could even go higher. Well, what's that? That's if the Asian markets and the Japanese markets start imploding, which they will, just a matter of when, not if. And all of those trillions, I repeat, trillions with a T, continue to be pumped into our markets. Gold and silver is going to continue to soar much higher, and our stock market's going to continue to go much higher. They're going to look for a safe haven to put those funds. Yes, they've been trickling in as we speak, and that's why we've been on this uptrend as of late. But once those markets implode, it's going to be a flood of investments toward our stock market, gold, silver, etc. So this will definitely continue higher. It's all a matter of how and which one falls first. And eventually, you can see this Elliott wave count. Even the U.S. market's going to plummet and have a drastic drop of over 50%, whether it's 6 months from now or 2 years from now. I don't know the exact timing, but it's inevitable it is going to happen. Well, check out the software. The last time we had a massive decline in the S&P was when what? We got a hook and cross pattern on a monthly, and it went on to oversold territory. The last time we had a hook and cross pattern of any significance other than early on was the flash crash. And I told everyone during the flash crash, keep buying that dip. When you get that slingshot back up, keep buying it, because the projected path is to go much higher. And notice, some would say oscillating indicators will not work in trending markets. Well, they don't know about the trend momentum and the PAI marriage. When you put the two together, this slingshot phenomenon is the best trading system for trending markets. Yes, oscillating indicators work in sideways markets, but it works the best in even trending markets. And the slingshot phenomenon continues to repeat itself in all markets. And remember what we just discussed. When you get a hook and cross pattern, we had one here, we had one here, and we had a subtle one here. Didn't last long, but we still got the hook and cross pattern in all three instances, right? Some of these started to hook, but we didn't truly get a cross with any separation. And we haven't had one for quite some time until where these three lines are. Remember what I said, doesn't matter the market. When you get a hook and cross pattern on a time frame like a monthly, that means the weekly is going to move from overbought toward oversold, overbought toward oversold. And check out the weekly as we scan back in time. Turn the auto scroll off. My weekly during the first incident went from overbought toward oversold. Way back in the early phases where that monthly hooked and crossed, the weekly went to oversold, and the weekly went to oversold each time. And that's just the S&P, and it's on any symbol, stock market, any futures, contract, anything. It doesn't matter the market, the financial market. This hook and cross pattern is the most powerful thing there is available. So let's continue. Some of you like to trade Forex. What's the significance in trading Forex? Forex is easy. Some would say that's, it's got leverage to it and it can trade and make a fortune in the Forex market. That's easy to do when you have the right tools. We have an ongoing trade that's in a pullback, but as I've been stating with our students, based on this weekly hook and cross pattern, we jumped in and we were up over 1,000 pips. Now we're down to 800 in a pullback to keep buying the dips in the uptrend. Why? Because the monthly is up, right? Monthly is up. Notice here we had a slingshot down that failed. It turned and hooked out. This high probability trade is not only going to continue to stair step higher, but it's going to go on and break the previous high, which is this 78.60 area. 76.50, sorry, 76.50 is that swing point high. That's where this monthly started to engage from that swing point. The likelihood this continues in the coming days and weeks to break that and go higher is exceptionally high probability. You notice we have a trade management system that allows you to manage the trade, so I don't have to work at this every day. I let it manage the trade for me. Why do I know this process is going to end in a higher high? Just like I showed you on gold a minute ago, let me show you on another currency pair that we've been through this already. On the pound New Zealand, we had the monthly slingshot engage and disengage. I told our students during that weekly hook and cross to buy and go long, and we would definitely go back to the previous high and make a new high. Notice what it's done in this example. It went on to make a new high as the monthly is still up. So what is my tactic on how to trade this? As long as the monthly stays up, I will start buying weekly slingshots in the coming week. So hint, 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 this is a pair that's in the process of a retracement. If we continue with the hook and cross pattern on this weekly, then we're definitely going to go down to the sweet spot location. And when this weekly reverses and slingshots back up, you want to buy this and expect we're going to go on and break a new high. Well, notice this was the previous monthly engaging, the weekly hook and cross pattern. We went down, reversed, and went on to make a new high. So this is why the probability of this monthly continuing to break the high here, let me go to my weekly, to break this high here at 76.50, which is just under 600 pips away. If we go a little bit lower, it'll be more than that. but we're definitely going to get higher lows and higher highs because the trend is already spoken for. It's up, and the monthly is up. So in the coming weeks, what do we expect? When the weekly turns over in the coming weeks, it's going to be forced to slingshot higher and higher as long as this monthly continues to move in an upwards direction. So what about other markets? Silver. Remember, there's different templates we offer. We have so many tools in our toolbox. Today's presentation of short 45 minutes does not give me enough time to go through all of our tools. But we offer numerous templates of many different types of tools, but every tool we offer has the hook and cross pattern involved. Yes, the triggers. The triggers are so smart in this software that remember the rule that a hook and cross means that even on silver, just like gold, you get a hook and cross pattern. And what does it mean? It's a daily hook and cross. What does that mean? The 4 hours is going to go to overbought territory, right? Everybody remember? And what has it done since then? And I'll turn the scroll back on. When we were back here during that hook and cross pattern, we then turned and hooked, and the 4 hour went from what? Oversold to overbought. And then started to slingshot higher because the daily started to reverse. Very simple. And we have trigger systems to help give you that. So you get a hook and cross pattern with the triggers, good to go. Whether you want to use the triggers or not, it's an optional tool that we have, but it's there for your viewing pleasure and a visual aid. Bond prices. Bonds long term are going to end up with a lower high and a lower low. Why? When the Fed starts raising interest rates, bond prices are going to move lower. During this correction, we knew from what? Remember the rule? When you get a hook and cross pattern, the likelihood of a Fibonacci sweet spot retracement is very high, and this is what we got, a hook and cross pattern. We should at least go to the sweet spot. Well, right now, my weekly's feeling a little pressure. It's starting to turn up, but I think it's going to end up making a lower high and a lower low, and this will turn back over, similar to what it did here. It turned up for a little while, we rallied, then it turned over. We're rallying again, and it's going to turn over and continue with this stair step lower. So that's what will be happening on bond prices. Why? Because the monthly is still down. It's hooking over, turning down. So the weekly that's turning up is going to turn back down as the daily gives us our new cycle down. So once we get the hook and cross pattern on the daily, look for this to move much lower. Now, when you put all those tools back into this, and we put this and added a scanner. So the hook and cross pattern, part of the direction of the trend momentum in the PAI is these little arrows. We have the triggers when they fire automatically on all time frames. When the slingshots are forming and or engaging, they're listed in this scanner. It's all inclusive. So whether you want to scan the markets, and I know this is only currency pairs, it's customizable. So I can add stocks, futures, commodities, any symbol that's located within the market watch, I can add to my scanner and get all of this data at your fingertips. It's very powerful to see this in a scanner mode, go to the chart and say, yep, I can see my trend momentums are up on the euro dollar, my 30-minute, 1 hour on this dollar yen. You can see they're starting to turn over and head lower on the New Zealand dollar, and it gives you an insight as the time frames are cycling, which direction are the trend momentum and the PAI headed. All right? People say, what about stocks? Well, we talked about, a previous presenter talked about BABA. How did you know BABA was going to go higher? Because I told our students to keep buying the dips in the uptrend on BABA because we're going to slingshot higher and higher and higher and higher and continue this process over and 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 over. Why? Because the weekly is still up and it's been slingshotting higher as well. That's part of the growth. So you don't need to just try to feel like you understand the right side of the chart and look for price pattern reversals or candlestick patterns. You add a candlestick pattern to a hook and a cross pattern, it is going to move in that direction. You use a price pattern reversal, it is going to move in that direction when the hook and cross patterns are with you. So no matter what you're trading, and no matter why you're trading or what strategy you're using, you add the hook and cross pattern of aligning multiple time frames, and that will give you your best outcome. And again, it doesn't matter if it's Baba, Amazon, any of the other stocks. Well, notice that we're all starting to get way back in overbought territory. Daily's overbought. Weekly still has a little more to go. So what is Amazon going to keep doing? It's going to keep slingshotting higher until we finish that weekly cycle. Once we get a hook and cross pattern, see here it is on another stock. You get your hook and cross pattern, and what happens? This is a weekly. If you want to know a time frame, it tells you right there, weekly, price, everything you need, right there at your easy to see. Once you get a hook and cross pattern, remember what we said, it means the daily is going to move from oversold, I mean in this case overbought, toward oversold. See how you can trade that with options? Any other method I want to trade this? Buy some puts, knowing it's going to go down. How low should it go? You use your Fibonacci retracement extension relationship, and then you look to buy the dips when you get the slingshots re-engaging. So yes, Amazon still has more to go on the weekly, and we expect the daily will continue to slingshot in the coming days. So what do? We buy the slingshot higher. So it doesn't matter if I'm trading stocks, futures, commodity, ETFs, Forex, it's all the same. The euro dollar is going to continue lower. Why? Because my monthly is starting to turn over, and I have, more importantly, a weekly trend momentum PAI with a PAI hook and cross. That means we still have some unfinished business from the swing point low to the swing point high. We have some unfinished business to reach our sweet spot location. So look for the euro over the next several days to weeks, if not another month, to continue this stair-stepping lower for several hundred more pips, at least to the 1400 range, maybe 12 to 110 range. And we're going to continue to follow it as long as the weekly trend momentum and PAI are down. We're going to do what? We're going to sell daily slingshots over and over and over and over. Well, this is just a brief little sneak peek of what we offer in our tool package. And it's like driving a jet or any type of airplane. You must rely on the engaged the tools that are offered, your gauges. And this is what this software does. Well, let's look at some trading results. Here's gold. We're not talking small little moves. This is a $126 move traded with our automated trade management system. Here was gold going up. Once we reversed, and that was an uptrend, now here's a downtrend. We traded this for a $150 move. Anybody trade gold out there? If you're futures contracts, you can make a fortune on a few dollar move, much less $100+ move. And here's access to Forex. One of our students traded using the signs and symptoms of our cycling time frame, hook and cross pattern, 8,600 pips over several Forex pairs. He kept it going to 18,000 pips on those same trades. Why? Because the time frames were aligned, and here's a picture of his trade station with those trades continuing to run, totaling 18,000. Here's gold to the upside. Here's gold, and now the pound odd moving lower. Here's a currency pair. Notice, it traded to the downside when we got the hook and cross pattern to start this move, and we started selling the rallies in the downtrend. And we not only had 700 pips here, but we knew it was going to continue lower because the higher time frames were down. It went on and improved to 1,274 pips. We weren't finished. It kept going, same pair. We continued to ride this lower because the time frame said keep selling the rallies in a downtrend. Went to 2,070 pips. That wasn't enough because the monthly was still down, the weekly was still down, the daily is going to keep slingshotting, and it went on to make 3,627 pips. You can make a nice income off of trading just Forex, but this allows you to trade all market. Pound CAD, 3,000 pips. Pound yen, 3,200 pips. Here's another tool called the Breakout. You can set this to be a breakout whether you want to trade the trend to the downside or trade it to the upside, or you can set it as pending orders, so if it breaks the high, you go long, it breaks the low, you go short. Use this in the first hour trading stocks for day traders. You can set it, and it automatically calculates the high and low for the first 30 minutes or an hour, based on your input, and then you can tell it to sell it or buy it depending on the trend. Well, the system is so smart, it knows the higher time frame direction, so you could tell it to skip it even if it breaks the previous high. Don't buy it, wait until it breaks the low and sell it, aka sell the rally in a downtrend. And this is where we made 272 pips on a simple breakout trade. Here's one of our students that had nothing to do with Forex. He was a strict options trader. He started using the software. He exited, made 1,200, got back in and made an additional 300. And he said, basically, if I would not had your trading system, I'd have entered this trade for a loss. And that he was so excited that he ended up dropping his financial advisor and newsletters he was paying for, and he applied for a Forex account, and he was telling his group that he's going to start doing his own trading instead of letting them trade for him. After all, who wants to make more successful trades for you than yourself? Nobody. So, what is the Master Trader program? It is the software. We just briefly touched on a fraction of the tools. It is the live trade class where I literally go through and explain exactly what the software is going to do, what to look for. I paint, as we call, paint the Picasso of the software, exactly how it's going to do it, what it's going to look like, and what it's going to do and when it's going to do it, and all that's included with this program. And we have trade alerts that we give out from class from time to time. What's included with the software? Again, you only touched on a fraction of it. The scanner I showed you, the sleight of heaven scanner you have not seen. It sets up when the monthly, the weekly, and the daily time frames align. The slingshot trade triggers, the trade management system, a platinum scalping system, a triple P scalping system, an MPA breakout trade system I briefly showed you. And finally, what are the 10 reasons why you want to use this software? It automatically calculates support and resistance. You don't have to worry, well, do I know where it is? Can I find it? It automatically calculates it for you. It'll identify the trend of each time frame. The critical component is it monitors and tracks the time frame cycles. It looks to the left to know what the lower time frames are doing. It looks to the right to know what the higher time frames are doing. And the software makes those slingshots higher or slingshots lower based on the cycle of the higher time frames. The trade management system you can set in advance, or so it's auto trading, or you can manually enter it and it'll still manage your trade from entry to exit. It fits any trading style. So that hook and cross pattern, we spent a lot of time on the weekly and the monthly and those. It works on a 15-minute. When it hooks on a 15-minute, your 5 minutes going to go from oversold to overbought, or overbought to oversold. If I have a 5-minute hook and cross, then the 1 minute's going to do it. So if you're a scalper, it works just as well. The dual scanners we briefly mentioned, set up for the next big trade. It works on over 800 symbols, including stocks, Forex, futures, ETFs, commodities, bonds, you name it. And it consistently delivers low risk, high reward, high probability trades. Now, I'm not going to offer any promotional today. I'm just going to invite you to a webinar. I have a webinar scheduled this Sunday at 9 p.m. Eastern. You don't need to register. All you need to do is copy this link, and my partner will post it in the dialogue, chat dialogue. So all you need to do is click on this prior to the 9 p.m. start on Sunday. I'll have more time to review all the tools and show you more of exactly what this system does. And as we go through, just write this down. If the hyperlink doesn't work, as she posted in your chat dialogue, then you can copy and paste that and put it into your web browser. Now, for the complimentary membership we promised, I want someone to go ahead and enter, the first person to enter their name, last name, and email address. Type it in. First name, last name, email address will win a 1-month membership to our program, a full 30-day month. And you'll get the opportunity to see this thing in action. Now, while you're typing your first, last name, and email address, I want to thank you for attending the webinar, and we look forward to you joining us. If you have any questions, you can reach us at support@gpatrading.com. And to finish this out, why is the MPA software so important? It stands for the Market Price Anticipator Software. It anticipates the markets ahead of time. It empowers you to read and anticipate price in any financial market on time, in time, all the time. And just an added bonus, we have over 117 countries and counting that we've been educating students from around the world. Our members have been with us not for a month, not for a year. They've been with us for years and years and years and years. From day one, they've been with us. And the reason is the system works. It works in all markets. It works in all time frames. And yes, I only had a brief moment to show you some of the tools. I can assure you there are many, many more. But as I finish and close, we still have a couple of more minutes. As I finish and close, it's all about the cycles. The time frames will always cycle. And it's never going to be a market condition in where the software will not be able to lead you in the right direction. The time frames always cycle, so price always moves in a stair-step fashion. The strongest of uptrends, the strongest of downtrend, always stair-step, and the stair-step is the beginnings of these slingshots. And remember, slingshot means the time frames are aligned. Hook and cross pattern means the time frames are aligned, and this does it automatically for you. So with that, I'll turn it over a little bit early and say thank you, Tanya, for inviting us, and we look forward to future endeavors with you as well. Take care, and thank you for your time and attention.